how the various kind of investors should be looking at some of these defense, shipbuilding, as well as railway names. Who better than Sunil Subramaniam to throw some light on that? Sunil, hi, good morning. Good to have you on the show. You just heard it from our research analysts, the kind of valuations some of these fancy defense railway names are sitting at, the kind of growth trajectory, and more importantly, of late, the kind of stock fall some of these stocks have seen, both on a monthly as well as on a weekly basis. Having said that, Sunil, I mean, if you were to, just elongate the chart for another 1 or 2 years, perhaps, a 30% fall is negligible, given the kind of returns some of these stocks have made. So what's the right way of looking at the, recent fall that some of these names have seen?
I think for an existing investor who got in early into this space, it's good to book profits. And the reason I say that is that the main reasons for the rally in PSU, and then you can understand the correction that's happening. Main reason of the rally was a huge valuation gap between the same private sector related companies and the public sector. So there was a catch-up rally happening because historically they've always been in a discount to the private sector. Now, why did that discount change? Why that perception of a discount went away? Was basically because of the government. The Modi 1.0 and the 2.0 had such a strong emphasis around the infra space. And so I think there was a lot of confidence that the government, through a mix of disinvestment, divestment, professionalizing these companies, getting in private sector honchos to head it, and would improve their performance. And so that, I would say, in a way, helped these stocks. The third thing that's helped them is this massive liquidity in the Indian stock market. So when private sector companies and most of the infra-related plays went up hugely in valuations, the relative discount shot up. So when there is plentiful money, naturally it came chasing. The final thing which caused them to really rally was, I think, two of the biggest mutual funds in the country, I think HDFC and then SBI, launched related funds, in ICICI Prudential. They collected 10-15,000 crores. Now, remember that the free float in these is very less because government owns 51% of the holdings. So, and then the institutions hold some more. So the free float is very less. So when these huge NFO collections came in, and you see the HDFC Defense NFO, I think the price doubled in the space of a year or so. So that liquidity went and drove up these stocks. So that's the overall situation behind which this run-up happened. And of course, it's not just the defense funds. Even if you take, there were energy funds which came in, infra funds which came in. All of them, naturally, within the indices, there are PSU companies there, and hence their allocation went up. So it's a case of both valuation catch-up and liquidity chasing. Now, what changed over the last few weeks or months? First is that Modi 3.0 didn't come back as strongly as Modi 2.0 did, right? So the relatively underwhelming thing meant that would the government be able to carry forward the agenda that it has in the same way on these? So some amount of cooling off in the expectations, because with now a coalition government, they need to cater a little bit. The heavy election season coming with Maharashtra, then Haryana, then Uttar Pradesh. So the government still towards consumption, government tilts towards this. So I think that's one which is taken. Second aspect here is that whatever the corrections that happened, right? See, the FIIs were sellers during the yen carry trade correction. They were sellers during the election-related correction and some amount during the Hindenburg correction. So what happens is that a domestic fund manager would look at his pool and say, when an FI is coming to buy, what do I want to sell? That where he has made more money. So I think it's just profit booking, a little bit of a reality check coming down onto this space. So but those who've already invested early and enjoyed a fabulous run, you can book profits and reallocate it. But those who are looking to enter now should do it in a staggered way.
Sure. Sunil, I want to understand, if you could just help our viewers understand, let's differentiate. Is the defense story over? Or it's just this leg of the rally in those stocks is over, in those stocks is over? How should we be approaching it? Because people are getting all confused. Just because the stocks have fallen 30-40%, if we bought it at way lower levels, what should we be doing? If we had just bought them, what we should be doing? Or should we approach this space at all? Because there is one view that probably all of the defense story, reform story is now already priced in.
See, if you look at it, I would fairly agree with you there, Ajay, because of the fact that, India is not in a situation where we are majorly facing any threat for which need to build up, right, from a defense. What's happening in defense is an increasing man-to-machine transfer, more automation, more artificial intelligence, more of that. And these things would come from abroad. Now, what happens is when it's part of the Make in India program, right, the government wants to indigenize the manufacture. And so when a foreign company also comes in, I think there's a 30-40% local indigenization, which the PSU defense companies were expected to get. So that's the broad story. So if you now look at it, I would say allocation to defense would not be as high as in the past in the future, because the government has far greater things to worry about. So to that extent, one. But second aspect to remember is that a lot of defense, there are pure defense companies that are companies which are in the general infra space supplying to defense also. So is the defense story itself over? No, because they do a lot more things there. So I would say that PSU defense, right, I would say probably has run up a lot. But overall, in the defense, because it's a part of the manufacturing infra space, there is still a longer term value creation, wealth creation to happen. So that's where I was saying that if you take a broader play and do it in a staggered manner, that would be better off at this point in time. And it's unreasonable to expect the kind of returns that the last 1 year, 2 years deliver for the next 1 year, 2 years. You have to tone down those to a kind of a low to middle double digit kind of a growth.
Precise and crisp advice for all those looking at or invested in already in the defense, railway, as well as the shipbuilding names. Sunil Subramaniam, thank you so much for taking the time out and speaking with us today and helping us, our viewers, try and make sense of the correction that some of these stocks have seen, rather steep in some of the cases, at least on a 1 month and 1 week basis.